Hello and welcome to the Ashanti Top 10 Most Likely Unseen Issues video for the August Management Case Study on server reseller SparkSpace. So before we start, I'm just going to go through a bit of an introduction to this particular video and where I've got the information on and what you need to do with said information. So how have I come up with these top 10? Well, first of all, you look at the focus in the pre-scene. If there's a lot of material in the pre-scene on a certain topic, then it's likely that there is some kind of importance of that topic. It's likely to be brought up in the exam, so there's more to talk about. And that feeds into the second point here, the degree of importance attached to it by the examiner. But that particular section extends beyond purely what's in the pre-scene, but also what CIMA like to examine. For example, ethics. It may be that there's no real mention of ethics in the case study, but ethics is considered very important by CIMA and therefore they are likely to examine it. Next is the strategic importance. How important is it to the organization? If a certain topic is very important to the company, for example, say their suppliers. If they rely very heavily on a certain supplier, then it's likely that there might be an issue on the supplier. If something were to happen to that supplier, what impact could that have on the business? And also, just a more general experience in doing these videos in creating mock exams and reviewing exams in the past, the typical kind of issues that come up, and what kind of things have the examiner brought up in the past. And my final point here is about how easy it is to write issues on that subject. The people who write the exams are obviously people too, and they will go for ones that they know, that they can write good questions on. So what do you need to do for these issues? Well, first of all, it's important to prepare key models. So this will be things like your SWOT exam, like SWOT analysis, like your PESTLE analysis. Because building up this information now will help you to adapt the new information given you in the unseen, or help you to have that context to apply the unseen material. Next thing you need to do is practice exam questions on these issues. This will help you to understand the kind of questions that will be asked around these topics and how to answer them. And also, this next section here, it will help you to plan these answers in your mind so that when you go into the exam and you start writing, you'll already have a background in which to apply this new information. You'll already have certain points to bring up in your head as you're writing for them. And I've also put some more generic things here, such as the advantages and disadvantages of these certain topics, where they would be used and how models can be used to support them. So let's move on to the top 10 issues now. Now, my first issue is on environment and competitor analysis. And the reason for this is there was a lot of information in the pre-scene, constantly referring to it as a non-diversified product, that there was a lot of choice, and of course there were a lot of competitors as well. In fact, BitBunch, the main competitor of SparkSpace, were very, very similar. They offered a very similar product. They had very similar numbers in terms of revenues, cost, assets, and profit margins. And two economic things that were very important were economic risks. Obviously, it's a very, very expensive service. It requires a lot of investment on behalf of the client, and therefore, if the clients are going through a period where they are not that affluent, they do not have that much money to invest, they're less likely to engage the services of someone like SparkSpace. And also changes in technology, changes in social needs as well have an impact on the company. Because of course the more the technology becomes available, the easier it is to get a hold of by clients, by competitors, and that perhaps would squeeze the market even further, or would make it a less profitable market to be in, because the huge amounts of financial outlay they currently need for these particular machines, for these particular systems, may decrease. But of course our costs are going to remain fairly similar. and therefore it may squeeze those margins even further. And so likely issues to come up in the exam based on environmental and competitive analysis would be things like assessing the competitiveness of the industry. So the five forces analysis, maybe a competitor, a key competitor of SparkSpace is going to do something new, and how is that going to have an impact on our business? How can we mitigate that? Can we go into that same market that they're going into? Changes to the external environment. So again, your pestle analysis this time. So if the government perhaps passes a new law that heavily restricts the ability of companies in the server resale, in the hardware and the software industry, how would that have an impact on the business? And also another reason is that it ties in with risk management. You may be asked a question about how a certain action by a certain competitor is going to have an impact on our business, and then how we can manage that, how we can get around that. And of course there was a lot of information about risk management. There was that risk index section. There was also a lot of mentions of risks such as the rise in cloud computing in the SWOT analysis within the pre-scene. And so the key points, the key theories that you must raise if you're asked a question on environmental analysis, of course, pestle analysis, five forces. Those are the key models to base your answer on. And also remember to reiterate the fact that it is a very competitive environment. There's a lot of information relating to this in the pre-scene that you can use, such as the SWOT analysis and the risk index. And finally, there's more of your recommendation point, your leadership marks points, the impact on the strategic developments of the organization. Now we know a lot of the company, a lot of the assets of the company, intangible assets of the company, a lot of their future is being staked on this investment in innovation, the Spark Innovate initiative and the like. And if their margins are going to be squeezed further and further, will they have less available to invest in these innovations? And that would possibly impact the future development of the organization, the future strategies of the organization. Now the next issue, issue 9, is on funding. So let's take a look at why I've chosen funding as my number 9 issue. Well, a lot of key topics in F2 relate to funding. So we have things like equity funding, debt funding, and of course dividend policies with the owners and the shareholders. And another reason why I've brought it in is because it is simply a very commonly examined topic. It usually comes up in most MCS variants, not always as its own topic in its own right, but it's always something to consider when you're being asked another question. So for example, a new project. How are you going to fund this project? Do we know, because of the nature of the industry, that often you do not get your payment until after the project has been completed, and therefore you have to invest a lot to make that money at the end of the project. You have to spend a lot of money to make a lot of money. And also given that investing in innovations and new technologies is incredibly important. So cash will be needed to support these investments and to support the research into these innovations, which we know is incredibly important to the company, and therefore there's a higher chance that we will need to raise funding, and therefore the higher the chance that you will be asked about a question on investment and asked about how you are going to raise money for it. So key funding issues and key issues that are likely to come up in the exam could be things such as a long-term investment, such as a new piece of machinery. We know that their capacity, their assembly line is currently at almost max capacity, and therefore they may need to expand and purchase another assembly line to meet demands. Acquiring another company, perhaps a similar sized company in a different market, a market they want to enter but they do not have the relevant expertise at the moment. And of course it's an industry very much built on brand names, and therefore they may wish to purchase a company in a new market that has goodwill in that market already. And again, new technology. So perhaps investing in a new HPC. So giving more money perhaps to the research and development department to further build on the mega brand, to further build on the HPC computing systems that SparkSpace currently offers. And also you may be asked to bring up the different funding methods available. So perhaps looking at the different funding methods and choosing a suitable one for SparkSpace. Some funding methods are more suitable for some companies than others. And this all ties in with short-term working capital as well. So all your things such as trade payables, trade receivables, etc., and cash flow. Cash flow is very important to a business, and so perhaps you may need to take out a small loan just so that you can continue trading in the short term if something is going to affect your cash flow. If your trade payables increase out of nowhere and you're not going to have as much cash, you're not going to have cash readily available to pay for them. And also dividend policies as well. So of course the dividends relate to perhaps the owners of the company and whether they will want to see fruit from their investment through dividends. And of course, dividend policy also brings out the question of the signalling effect and whether paying out dividends shows that you do not have anywhere to go. In this kind of industry, it's heavily built on the fact that you are reinvesting your money, you are investing in new innovations, new technologies, and so perhaps paying out huge amounts of dividends signals that you are not investing, you do not have any new innovations, which of course will actually have a negative impact on your perception. And so key points to bring up based on the content of the pre-scene. Perhaps not having too much cash available for investment. We know it was over 400 million Western dollars, but that may not take us very far, given that we have revenues in the 4 billion Western dollars, costs in the 2 to 3 billion Western dollars. Actually having 400 million Western dollars in cash does not mean that much, particularly given that we've got nearly 300 million in Western dollars in trade payables that will have to be paid very soon. We also know that investment in this industry is critical, and therefore they will need to have a lot of money to invest. So again, will this 400 million Western dollars take us very far? We do also know that they have incredibly high debt levels, upwards of the 3 billion Western dollars mark. So that will make it very hard to take on additional debt funding. So instead they may need to raise money by having more equity investment by the owners, by the shareholders. They also have nearly 1 billion in Western dollars in tangible assets on the statement of financial position. So we could sell these to raise funds, but if they are critical, we could just use them as security to raise debt. So we could say to the bank, we'll put this particular machine up as security. If we fail in our debt repayments, you can have the machine. But of course, we know that we will pay our debts back, or at least we hope to be able to pay our debts back. I'm going to finish this by talking about a suggested order of funding. So the first port of call should always be to use cash available. Now, we know that they seem to have a fair amount, but it could be all relative. But if there are small projects perhaps only require a few $100,000 or a few thousand Western dollars, we should use cash for that. The next thing is debt funding. Now we know we have a lot of debt funding already, but it could be that that is the industry standard, and therefore it would make sense to continue raising finance using debt funding. And this could be from the asset base, securing against the asset base, or just from taking out new loans with the bank. Because we don't want to be in a position where we cannot invest in new innovations, in new products, because we know that is critical and crucial to the continued development and growth of the organization. Also selling particular assets if there are any available to sell, which they could be, they could not be. We haven't seen a breakdown of the tangible assets yet. We do know that they seem to, particularly with the plant and equipment, there does seem to be a revolving door of assets, perhaps because of the nature of the industry, because of the technology in the industry, that we're constantly having to replace our assets. We should look for those that are less consistent with the company's strategy. Perhaps given that the company is undergoing a growth at the moment, part of their strategy is to grow, selling off assets that we have will not be consistent with the strategy, because if we already are in a position where we need to expand, we need to grow, selling off the assets we already have is unlikely to be helpful in achieving that. And finally, equity. I've put this last one here. Equity is often good because it doesn't have to be paid back in the same way that the loans have to be paid back. Dividends don't always have to be paid, but it can be incredibly expensive to raise new financing, and it also can take a long time. If we're owned, then we have to get financing from our owners. If we decide to trade more on the stock market, we have to publish a lot of information to the stock market, and then we have to wait for the financing to come in. And key theories that you can use when talking about funding are the dividend signaling effect, which I spoke about earlier, and also the advantages and disadvantages of debt, which I've briefly gone through on the previous slide. Debt is quicker, it's cheaper, and given the nature of the industry, it's likely to be quite feasible, quite sustainable. We're already running with such huge proportions of debt. Obviously, that's just how we run our company. That's the way we run our organization, and therefore we're in a good place to take on additional funding. And equity, of course, the advantage of equity being that repayment of capital through dividends is optional, whereas, of course, with debts, it's not optional. We cannot tell the bank that we may or we may not pay back our debt. We may or may not pay our interest payments. So I hope you've enjoyed this sample video and more importantly found it useful. Before I go, I'd like to quickly tell you about a few of the products that we do here at Astranti Financial Training, specifically for our case study courses. We have a study text which details all the key theories in which you will be expected to use in your case study exam, as well as details of how to approach the pre-scene and the case study. We also have a series of course videos detailing how to answer case study questions. This is actually an area in which many students struggle. Most of the scripts that I've seen, the failing scripts that I've seen, has actually been due to poor case study technique rather than lack of knowledge. We also have a series of pre-scene analysis videos based on the current up-to-date pre-scene, detailing all the key bits of information and likely issues you may face in the exam. Next up is the industry analysis, a pack detailing information about the industry that the pre-scene company resides in, information about the key players within that industry, and more background information on the industry in general. We also have a range of mock exams created for each level and based on the current pre-scene, which is a great way to get some practice in before you sit the real thing. We also offer marking and feedback on those mock exams so you can see where you are going wrong and where you can improve. Finally, we have the master classes. These are 2 one-day classes taken by our expert tutors to give you all the hints and tips you need to really add to your chances of passing the exam. Also, if you take our full course, we offer a pass guarantee, which, provided you have met all the requirements of the pass guarantee, you will get a free resit on the next exam should you fail to pass. So once again, thank you for your time. If you're interested in any of these products, please visit the website www.astranti.com for more information. Thank you.